Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Karl Susman. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We have a very good show planned for you today, and hopefully we will execute on that show as well. We are going to be talking about life insurance, but we're not going to be talking about life insurance the way you're used to hearing it. Normally, if you listen to anything about life insurance, you're going to be hearing a sales pitch, right? You're going to hear why it's so good for this, or why it's so good for that, or how it saves you money, or how it's actually free, or the tax benefits, or blah, 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 all this other stuff. And I get all that. We're going to tap on everything. We're going to talk about the good. We're going to talk about the bad. We're going to talk about things that you should know, things that you think you know that you might not know. And we're going to try and cover all of it. Now, I get a lot of questions that are sent in to me by email or voicemail. Let me give you those numbers, by the way. The phone lines are not open today because we're going to be doing this show uninterrupted. But go ahead and give us a call and leave a voicemail with your question, and we will get to it. That number is 559-656-0317. You can call that number, you can text that number, or you can email your questions in to questions@insurancehour.com. We'll get to those questions. We'll answer them on another show. One of the reasons that I'm doing an entire show dedicated to life insurance today is I do get a lot of questions about life insurance. And I feel like rather than just answering the questions here or there that are thrown out, I would take an entire show and sit and really have a conversation with you about it, because life insurance is not as simple as it seems, and it is as simple as it seems. But there's so much noise out there, and I'll explain why that's the case as well, that I think that it makes sense for you to take some time and really understand what it is that we're talking about. All right, so let's jump right in with that. When you hear about life insurance, what do you think? Well, you think insurance that pays when you die. Fair enough. I think it's an interesting point to make that when you buy a policy for your car, let's say, or for your home, and this is not literally true, but financially speaking, you hope that when you buy the policy, you have a claim the next day. That way you'll have paid just a little bit of money and you're going to get a big chunk of money back for your claim. Now, of course, none of us really want to have a claim, but financially, that's sort of the way you might be trying to think about it in your own mind. Whereas with life insurance, your hope is that you pay money today and you just keep paying, and that the insurance company never has to pay, because if they never pay, that means you're still alive, right? So you might even say that your hope is that you pay premium and again die the next day, because then you get all of that money paid out and you're still alive. But again, that's not really how you think. But I want you to understand the dichotomy between when you're paying for one type of policy and you want to have a claim versus when you're paying for another type of policy when you absolutely don't. Again, keeping in mind that we never really want to have a claim. But when we're just talking about pure dollars and cents coming or going, life insurance is going to be backwards, because you do not want to have those claims. You do not want to die. I'm going to go ahead and take that as a given that you do not want to die. So hopefully I'm correct in that point, right? So at its core, life insurance is a policy that you take with an insurance company. It's a policy where you pay premium in some form or another, and we'll talk about it. And when you die, the life insurance company will pay a death benefit to others. And others we'll get into in more detail later. It could be a company, it could be a trust, it could be an individual, it could be all of those different things, okay? So at its core, life insurance is the exchange of paying premium on an insurance policy for a death benefit to a beneficiary, okay? Now, yes, there are living benefits of certain policies. We'll get into that. Again, like I said, there's a ton here to unpack. So you understand that there's a difference between a policy that's covering a house versus a policy that's covering a car, right? The insurance company is going to have to look at the risk entirely different. People are much more complex than structures, than tangible items. But it might surprise you to know the history of how far back this concept of life insurance goes. Believe it or not, we can go all the way back to ancient Rome, and they had something that were called burial clubs. How they know that's what it was called, I don't know. But it is said that they are called Roman burial clubs, where members would pool their resources together for funeral expenses. Interesting. So even back then, somehow it was a drain on the people that were still living to pay for the final expenses, to pay for the burial and whatever other types of ceremonies that they would have for the people that were left. So people would pool together and say, all right, if anyone in this group has someone that dies, we'll all chip in a few bucks to be able to help them pay for it. It's kind of like the first GoFundMe, I guess, something along those lines, right? Now, that is very different than other types of insurance policies that we saw back in the day in the 17th and 18th century when there were maritime insurance policies at Lloyd's of London, which would do something similar, right? But they were pooling their money together in case one ship would sink, then they would all chip in for that. Now, there were early attempts back then at having what are called life contingencies for people that were extremely wealthy, okay, or noble. So there were options that were out there that would say, all right, this person, this very, very wealthy person in the 17th or 18th century is worth a lot of money. And if something were to happen to them, that money is going to get gobbled up somehow, right? The state laws were not quite as concrete as they are today. Somebody would die and there would be sort of this vacuum that would open up and everybody would keep running in and start taking their stuff, for lack of a better way to describe it. So there were concepts in Europe, and again in the 17th and 18th century, where people would put these policies together, something like an insurance policy, and say, well, if this very rich person dies, we know we're going to be able to be liquid this type of money because we're going to literally turn around and we're going to pay it. We're going to plan for it and we're going to pay it, which again, I think is fascinating to think that all the way back, life insurance started as a way to protect the ultra wealthy, or at least to protect the beneficiaries of the ultra wealthy. After that, it was emerging more in the 19th century. It began to be structured more for the middle class. And there was this understanding of that there was a benefit for everybody to be able to potentially have life insurance. There was something in the 1700s called the Presbyterian Ministers Fund, just what you would think. It was going to pay a benefit to the church in the event that there was a minister that died. So this was starting to gain some attention and some traction as time went on. At its core, risk sharing, allowing lots of people to share in the potential expense that would happen upon someone's death. Let's take our first quick break. When we come back, we're going to talk about some pros and cons and more practical things for you. This is Insurance Hour with your host, me, Karl Susman. 60 seconds, and we are back with you talking about life insurance. Stand by. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when, they can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here with me today. We are talking about life insurance, and not what you expect, but we are talking about the truth and the things that you do need to know. This is not a sales show. Before we get back into that, first I want to thank our sponsor, GeoVera Insurance Company. GeoVera offers earthquake insurance, and you know what? There's no such thing as they don't have earthquakes where I am, because they do. If you're listening, if you're watching, chances are there are earthquakes. The question is just how much damage is there going to be? I personally have GeoVera for my own home. I could purchase it from pretty much anybody, earthquake insurance that is, and I choose GeoVera. I have for more than a decade, and I find them to be very competitive and their products to be extremely customizable. So that's where I go for what it's worth. You want to get a quote from GeoVera, jump on insurancehour.com. You'll see a link for our sponsor, GeoVera. get a quote for your earthquake insurance there. I think you will be surprised at how affordable it is and how much coverage you can actually get. Giovera, thank you again for your sponsorship. We're talking about life insurance today. Remember, the phone lines are not open, but please remember you can still call and leave a voicemail or send a text. That number is 559-656-0317. And of course, the email questions@insurancehour.com is always waiting for you. So we're talking about life insurance, and we're talking about why people purchase life insurance. So let's talk about some of the core actual reasons. Forget the sales pitch. Let's talk about the actual reasons. The number one reason, the most rooted reason, right? When you think about life insurance, or maybe you don't realize it, but this is what it's actually designed initially for, is to replace income. You've got it. Let's just say you've got a husband and wife and they're married. Let's go back in the older days, right? And say that just one of them is working and generating income. And now there's a family, maybe they have a few kids, and that person dies. We're going to say dies prematurely. Everyone dies, but there's a phrase that talks about when you die before your life expectancy, and we call that dying prematurely in the biz. So the one breadwinner in the house dies. And what happens is you've got the spouse and the two kids, and they have no income. So life insurance was designed to be able to help with that and say, okay, we're going to replace the income that particular person was generating. Well, this person might have been making X number of dollars a year. Maybe their income would vary. Maybe they're new at their job. Maybe they wouldn't have been able to keep their job. So how do we turn around and really decide what it is that is going to be an amount of insurance to pay if they die? Well, there are lots and lots and lots of calculators that people in the business use to try and estimate. Some people would say, well, first you take their income times 5. You figure out, you get 5 times their income, and you'll have to figure out a way to make money after that. Some will do that, and then they'll say, well, you know what? You got one kid, and usually the average cost for a kid age 0 to 18 is about $800,000. So you add that into the 5 year. There's all sorts of cookie cut ways to do it. And what I've found to be the best actual answer to that is there is never enough life insurance. There just isn't. Because if you lose somebody and it's a horrible, horrible thing, you're never going to say, oh, that's too much. I don't need that much money. Take some of that back. You're not. You're going to take what you need, and anything that you don't need, you're going to use to grow your estate. Now, the estate planning is another reason that life insurance exists. Now, let's look at someone that has a large estate. Large is relative, so I'll let you fill in that blank for what that means to you. And upon their death, they have what are called, yes, you guessed it, estate taxes. We pay taxes when we buy something. We pay taxes when we make money. We pay taxes when we sell something. We have to actually pay taxes when we die. We have to pay taxes to the people. Let's try it again. When we die, the people that take what we are leaving have to pay taxes on yet even that. It's kind of wild when you think about it. So people will say, all right, if I have an estate tax that's coming, meaning I know based on my assets that when I die, my beneficiaries are going to have a large tax bill to pay, I'll buy a life insurance policy so that lump sum, meaning that chunk of money, will be available for them to take and pay that tax. That way, in essence, they're able to get the money, they're able to get my estate without having to pay taxes. Not true, they're paying taxes, but they're paying for it based on something I've left for them. So people that utilize life insurance in order to fund tax planning purposes, what they're really doing is they're taking a small part of their estate that they would have left and would have been taxed, and they're turning around and saying, all right, I'm going to take a little bit of that. I'm going to purchase one of these life insurance policies. That way, this little bit of premium is going to pay for this large tax bill that comes. Make your own judgment. Not for everybody. Some people would say, you know what? I'm leaving them enough. They can pay the darn taxes on it. Believe me, I've heard it. Or some people say, you know what, if I can spend $1 and they're going to get $100, I like that. Why wouldn't I do that, right? It just depends. And everybody's financial situation is a little bit different. So that's estate planning purposes. There's also something that you people utilize life insurance for. We talked about it briefly, and that's funeral and final expense costs. It is not cheap to deal with someone once they've passed. If you're looking at a burial, you're looking at a large cost. If you're looking at a cremation, it's not cheap anymore. I don't know if it ever was cheap, but it is certainly more expensive than it ever was in the past. You have to go through probate, which is a legal process, not an attorney disclaimer, where the assets have to be transferred from the deceased person to you. There's legal fees that are involved in that. There are lots of costs that are involved. And you know what? It's difficult. It almost seems like a scam, but it's the reality that in order to get the money that's due for you, you have to pay money first in order to go through the process. Kind of wonky, but there it is. And finally, people look to utilize life insurance for business continuity, right? Let's just say that somebody owns a business and that business would not run without them. It just would not happen. Well, the business has employees, it has all sorts of other things, right, going on. So that business will purchase a key person life insurance policy on that one person that says, okay, in the event this person dies, then the business is going to get this lump of money. That lump of money will be utilized to keep the business going, to hire somebody temporarily while they train somebody more permanent. It could be utilized to maintain the credit that the business has. All sorts of things could be in there that could be necessary to keep a business going if that key person is gone. Fun fact, is it a business expense to a business to buy a life insurance policy? The answer is likely yes. Again, not a CPA, not an attorney. Does that make it tax deductible? Not an attorney, not a CPA. And the answer is typically no, but your mileage may vary. You need to talk to your CPA. There's been some changes in laws on this. So you need to find out if that's going to be applicable to you or not. What is going to be applicable to you, I just can't get out of doing these things, is you're going to be waiting another 60 seconds because we're going to take another quick break. We're going to pay the bills with our sponsors. Thank you for staying here. This is Insurance Hour. I am your host, Karl Susman. We're talking about life insurance. 60 seconds and we'll do it some more. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Greg.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We are talking about life insurance, not a sales pitch. We're talking about the good, the bad, and the ugly, things that you need to know, things you need to understand. And we're going to try and dissuade you from some myths that you may have heard. And we're going to fill you with truth bombs. Sounds terrible, but it sounded good in my mind before I said it. Hey, phone lines are not open today, but I do want you to still call in and leave us a voicemail with your questions. We'll answer them on a future show. That phone number, 559-656-0317. You can call that number. You can text that number. Also, if you'd like, you can send an email in to questions@insurancehour.com. We get those voicemails. I answer. I would like to think that I answer every single question eventually. We get a lot of questions, hundreds actually. So your question might not be handled today or next week, but I promise you we will get to it at some point in some fashion or another. If you have not had your question answered yet, shoot me a text. And usually that's a way to get my attention. Shoot the text to 559-656-0317 and say, Karl, hey, where's my answer? I left a voicemail, a month ago. And I'll push you up to the front of the line. Hey, let's get back. So we're talking about life insurance. I want to just make a few simple bullet points for you, right? Good points and bad points about life insurance, all right? Good points, financial security, big lump sum. Nobody complains when you give them money. Cool, right? Another good point, yes, not a CPA, but there are tax advantages to it. Generally speaking, death benefits are not subject to income tax. That's a big deal. Another good point, peace of mind. You're going to know that when you're gone, your family, your beneficiaries, however you want to phrase it, are going to be in some way at least comforted and taken care of with, you've got it, money. Now, bad points. There are plenty of these as well. One, cost of premiums. They can be expensive, especially if you're looking to purchase a policy later in life or if you have some form of health condition. Complexity is another negative. Look, I'm doing a show. We're doing an entire hour on life insurance, and I literally am not scratching the surface. Life insurance is complicated. Don't let anybody tell you it's not. It is. Another problem is over or under insuring. More under insuring if you want my personal take on it, because a lot of times you need X dollars, but you just can't afford it. Or the insurance company simply won't offer you that much coverage for one reason or another. Keep in mind, if you're making $100,000 a year and you go to a life insurance company and say, I'd like a $15 million life insurance policy, please. They're going to say, whoa, what is happening? What is this person planning? What in the world are they doing? Why do they want that much money? Now, if they asked for $1 million policy, no problem. $2 million, probably still not even going to create any waves. You get over $2 million with an income of $100,000 and you're probably going to start to have some more questions to answer. And it's a sad thing, but people will buy life insurance policies and they will die prematurely by their own hand. And that's just as a quick side note. There are issues with life insurance policies, certainly in the first 2 years, if somebody does take their own life, and it's a horrible, horrible thing. If you're ever contemplating, please get help. Then the life insurance carrier does have the ability to not pay the death benefit. So please, again, never think about these things in any way, shape, or form, but understand that there are legal ramifications as well. A lot of times the life insurance policy is actually not going to pay out. Okay, even so. All right, let's talk about some more details about life insurance. Is it an investment or is it protection? Well, depending on the life insurance policy, it could be one or the other. Let's talk about a couple of types of life insurance, right? We're going to talk about term life insurance. Term life insurance is like it sounds. It is life insurance for a specific term or a period of time. That is it. From this starting point to that starting point. If you die within it, you have coverage. You die outside of it, you don't. It's pure protection. There's no cash. There's usually no living benefit. It is what it is, okay? There's permanent life insurance policies, and we'll talk more detail about all of these, such as whole life, universal life, guaranteed universal life, variable universal life, blah, 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 all this. Like I said, there's so much to this. Now, there's the potential for a living benefit with some of those policies. Now, living benefit means you can be alive and have a benefit from the policy, and that benefit typically is access to money, access to cash, right? Now, that's pretty cool. Forced savings accounts are one of the things that people talk about as being a big benefit to certain types of permanent life insurance policies because, well, you're paying the life insurance and so at the same time, you're building your savings. What could be better? It's a forced savings. Well, that's true. But then at the same time, what's the return you're actually getting on that money? Is it a better return than you would get if you just took that money and put it in the bank? Don't forget life insurance, because it's complicated and because it's an insurance contract, there are fees that are there. They're all disclosed, but there are a lot of fees. You're not taking $1 and having that $1 invested. There are lots of parts of it getting chipped away before it actually gets to the savings part. Make no mistake about that. And be sure that you have your life insurance expert go over that with you. So keep that in mind. Not saying it's a bad thing. Some savings is better than no savings. Some of the discussions that I've had in the past is I remember people will say, well, I can make more money with that money in the stock market. And I would say, great, are you going to do it? And they say yes. And then, of course, 2, 3, 4 years later, they'll call back and say, you know what, I didn't routinely put that money away. And of course, they don't have the money they were hoping to have. So they will usually try and do something later at that point. So when you're having that mental conundrum, should I buy term and invest the rest? That's the old phrase, right? Buy term insurance, take the balance of what you would have spent on, say, a whole life policy and invest it. That concept may or may not work. There are tax ramifications either way. But the question is, will you? The answer for most people, the vast majority of people, is that they simply do not. They just don't do it. So understand that while something might be a good idea in theory, if it's not actually done in practice, then what value is it? There are also some ethical considerations I want you to be aware of for life insurance, right? Are you profiting from somebody's death? Well, if you're getting more than if they were alive, arguably you are. Not super cool, right? There's some historical controversies. There was something in the early 1900s called dead peasant insurance. You can figure out what that is. People were buying insurance on people that did not have much financial value as far as income, and they were literally buying them as investments, and they were making money when they died and not when they were alive. There are things there are laws now that are in place to try and prevent that. There was also something called janitor insurance that Walmart was actually involved with, but that's a story for another time. Speaking of another time, there it is again. It's time for another quick break. We'll be back with more about life insurance. I'm Karl Susman. This is Insurance Hour. Stand by.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at sussmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4-CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. This is Insurance Hour. I am Karl Susman, your host. Thank you so much for being here today. We are talking about life insurance, the good, the bad, and the ugly. This is the truth bomb of life insurance, okay? This is not a sales pitch. This is not one of those, oh, let me educate you on life insurance. And it just so happens everything I say is so good that you are going to run out to buy life insurance, ideally from me. No. This is not what we're doing here. We're talking about life insurance with the point of educating you only. Okay, educating you only. We are not trying to sell you anything. We're not trying to convince you of something that's just so good. What could be better? I'm going to give you the good, the bad, and the ugly. We're talking about it now. Remember, the phone lines are not open, but please do still call in if you have questions. We'll get to them on a future show. The phone number being 559-656-0317. You can call or text that number. Also, you can send your questions in by email to questions@insurancehour.com. We love the questions. They're what keep us on the same page as all of you, enabling us to answer the questions that mean something to you that you need answers to, all right? So let's get back to it. Life insurance. We talked about some of the pros, some of the cons, and some of the complexities. If you've missed any of it, just go back to the beginning of the show. You can find it on Apple Podcasts, Spotify, TuneIn, Pandora, YouTube, of course, everywhere else. So let's talk about some of the policies you've probably heard about and what they actually mean. The first one is term insurance, term life insurance. And you will hear that phrase over and over and over again because it's the simplest to understand. You buy it. If you die while the policy is active, a death benefit is paid out. Bum. That's it. Believe it or not, there are actually some caveats even to that. For example, there's a period of the first 2 years called the contestability period, where if you've lied on your application, the life insurance company has the ability to underwrite after the time of death. So you might have lied and said, oh, never smoked a day in my life. And they find out that you actually were a smoker a year ago. If they find that out within the first 2 years and you pass away in that first 2 year period, they can actually have the option to not pay for that death benefit. Now, that sounds horrible, and it is, but keep in mind that after that 2 year period, it is extremely difficult for a claim to be denied if a death actually occurs. Extremely difficult. Not impossible, but extremely difficult. So a bit of a double-edged sword there. Double-edged sword. What a horrible expression for a life insurance show. Sorry. Term. How is term life insurance purchased? Usually for a fixed period of time, 10 years, 20 years, 30 years. There used to be 5-year policies, and you can still now and then find an annual policy. The problem with those are, well, what happens during that period of time? 1, you have the policy, and 2, the premium does not change. So if you're going to get a policy and you're going to want to have it for, 10 years, 20 years, it makes sense usually to buy it for that period of time because the premium you're paying will be the same throughout. Now, if you buy a 10-year policy, it's going to cost less than if you buy a 30-year policy, right? Because the insurance company says, well, the likelihood of you dying in the first 10 years is a lot less than you dying in 30 years. So the premium is higher. Now, one other point I want to make about term insurance, because this is an interesting one people get wrong. Term insurance is what's called a unilateral contract. Not legally speaking, again, not an attorney. Meaning the insurance company must perform, you do not. Meaning if you stop paying your premium, you can do that, and the policy will simply end. Whereas the insurance company can't say, yeah, I think I don't want to have this policy anymore. They can't do that. So while the term is locked in and premium is locked in, you always have an out. It's not a contract that you must continue paying, where if after 10 years you win the lotto and you're like, I don't need this silly little life insurance policy anymore, you're not stuck having to pay it. And I think that's an interesting point that people don't all know. So be aware. They have to keep the policy during the policy term. You can cancel it or stop paying whenever you want. All right, that's term insurance. Whole life insurance. Now, this is what you hear about. This is the big granddaddy. This is the policy that is supposed to be in place until you die. In reality, it's typically a policy that will last until age 95 or age 100, which is usually pretty good for most people, although we are seeing people that are living beyond that. Whole life insurance, there are 2 characteristics that are important to be aware. One is that the premium you're paying is not going to change, right? It's not going to become a more expensive policy as you get older. And the other part is some of the premium that you're paying is going, in essence, into a savings account, right? An actual cash accumulating account. And it's based on a fixed interest rate that the life insurance company decides. So remember, whole life insurance, you've got it potentially your entire life, and there are some living benefits there. Interest rate for some of the savings decided by the insurance company and fixed. Universal life insurance, similar to whole life, except the premium is flexible. Wow, sounds great. Not so good. I'll tell you why. The problem is that universal life insurance will allow you to pay less premium than is necessary to keep the policy alive for your entire life, like a whole life policy does. So what happens is you might pay this super low premium for 10 years, 20 years, and all of a sudden, because you're 20 years older, the policy does not have enough funding to to stay active. The carrier will say, oh, by the way, your premium is now 8 times that price. Whoa, what just happened there? So beware with universal life. Find out how long is it estimated, because it's based on a variable interest rate. The interest rate moves up and down. How long is that policy going to go? Be sure you know what you're getting yourself into. There is something called guaranteed universal life. It's exactly what it sounds like. There is a guaranteed death benefit for a period of time, but not guaranteed cash. More expensive than universal life, has a little more guarantee in there, which makes sense. There's something also called variable universal life. This is a securities licensed product, and that's because that cash that you're investing in is going into mutual funds. So a securities license is necessary for that. There's also something called return of premium term life, just what it sounds like. If you have a policy for 30 years, you pay 30 years. At the end of the 30 years, if you're still alive, they give you all your money back. Too good to be true? Well, it's more expensive than the 30-year term that doesn't give you your money back, right? It makes sense because they're giving you this money back. You're paying more money all along. And then finally, there's something we look at called final expense, usually a small type of life insurance, small as far as face value and premium. Normally, people will purchase this when they're on the older edge, older than younger, and it's going to be just to pay for bare bones. Oh, another pun. Burial expenses and final expenses. It's not going to be used for estate taxes. There's just not enough of a death benefit that is there. Those are the primary types of life insurance that are there. Now, we can talk a little bit more in detail about each, and I think we'll do that after this break because you need some more color to be put into this picture. Insurance Hour with Karl Susman, getting ready for yet another 60-second break. Be back in a flash.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Greg.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today, learning about life insurance, the good, the bad, the ugly. This is not a sales pitch, and I want to keep emphasizing that because it is difficult, really difficult, I found looking around, to find an informational show about life insurance that isn't trying to sell you something. I know, right? Don't you want to understand what it is before you're sold something? These are not timeshares, okay? There's no sales pitch involved. This is simply educational for you to learn. Now, the phone lines are closed right now, but go ahead and call anyway. Leave us your questions on the voicemail. Let us know, do you want the question to be read live or played live or just have the question answered? Phone number being 559-656-0317. You can call that number or text that number. You can also send your questions in to questions@insurancehour.com. However you want, get us your questions. We love them. We'll answer them for you. Before I get back, I want to just make one quick point. And you know, this is probably something that I do with some frequency, and it's for a purpose. I want you to understand that I am a human being, and I cannot and do not know absolutely everything. So if you hear something and it doesn't sound perfect, it doesn't sound exactly to be what you believed it to be, and you want me to double check, let me know. Send me an email, give me a call, say, hey, when you were talking about life insurance, you said blah, 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 blah. I'm not so sure that's the case because I was told otherwise. I will dive in and try and research it and figure out what the right answer is. This isn't an ego thing. The idea is I want you to have the correct information, even if it means I have to go back and eat some crow. I want you to have the most up-to-date and accurate information that I can get for you. So if I get something wrong, or you think so anyway, of course, if you think so, we have to not be sure that it's actually true. I'll double check. But seriously, let me know because I want to check and I want to find out for you. The goal is for you to have the best information you can. And if that means I have to backpedal, I will. Now, let's get back to it. Life insurance. Now, what are some of the more details about these different life insurance policies? And you get asked this, or at least I do, this question all the time. What's the best kind of life insurance to get? Well, the life insurance policy that's the best for you to get is the one that's in place when you die. That's the sarcastic answer that I like to give people. Because, of course, if you're going to be dying quickly, then you want something that's the least out of pocket. If you're going to be living a long time and maybe you're going to need some cash and blah, blah, blah. Of course, you see where I'm going with this. There's no way to know for sure because none of us can predict the future. The only thing we can know for sure is that eventually we're going to die. That's the only part of this equation that we can know for sure. So there's no way for anybody to tell you with any factual accuracy that this policy is the best. It all depends. It depends on how long you're going to live. It depends on if you need access to money. It depends on what your budget is. There are so many factors that are involved. So the first thing I want to be sure you take away from this is that there is no one product fits all. There is not. Beware of those one-trick pony advertisements that say, the best, the only, the cheapest, the blah, blah, blah. No. With life insurance, it does not work that way. It does not work that way. Something else I want you to be aware of when you're talking and looking to potentially get life insurance are the different channels to purchase it. Now, you can purchase life insurance directly from a life insurance company. You can purchase through a general agent, right? Which is a sort of a conglomerate. It's a company that works with lots of life insurance companies. Or you can purchase through an agent or broker. What's the difference? Well, the good news is the price should be the same. Broker fees or agency fees are not things that we will usually see added on to life insurance policies, which is super good. So you're not going to have that issue. Now, who you decide to do business with is up to you. I would say purchase from the person that you feel the most comfortable asking the most questions to and getting the most answers. I will say one thing, and I don't want to trash the industry. One thing that I have found has not usually been a good place to purchase life insurance is from your CPA that has a life insurance license. And again, I don't want to throw any CPAs under the rug, but CPAs are CPAs and they know their stuff. They know numbers, they know taxes. That's what they're supposed to do, and that's what they do well, hopefully. Some of them have gotten life insurance licenses and they've decided they can make some money by selling those policies as well. And I have had bad experiences from people coming to me that had purchased the policy through their CPA. I think I can, sitting here now, think of 2 right off the top of my head, and it's happened more than that. And it's not that they did a bad job, it's just that they didn't offer the best product because they didn't have access to it. Typically, if you're an individual and you have a life license, you're not going to have access to a ton of life insurance companies. They're going to want all of the carriers are going to have some type of requirement to work with them. And if you're not selling more than a policy every blue moon, you're probably not going to have access to them. Ergo, you're not going to be able to offer that to a client. So if you're purchasing a policy, make sure you're purchasing it from some source that has lots of options to go to, because term policies can differ. They can differ in price. They can differ in the conditions. They can differ in the underwriting. And we haven't even talked about underwriting. So beware when it comes to these things that you want to purchase from someone that does have the ability to work with more than one insurance company. Okay? Let's talk quickly about underwriting. What does underwriting mean? Well, you can't just walk in and get a policy, right? You have to be able to be insurable, is the phrase that is used. Meaning you have to be healthy enough that the insurance company can decide how long you're going to live to be able to find out what premium to charge you. There are certain health conditions that are considered uninsurable. I will argue with that till the day I die. Again, what's with the puns? But there are certain conditions that a lot of carriers will they're called knockout questions. If you answer yes, they're done. Now, by the way, side note, there are guarantee issue life insurance policies, which are just what they sound like. You get them no matter what your health condition is. The caveat to that is that there's usually a graded benefit, meaning for the first year, if you die, nothing. The second year, nothing. And by the third and fourth year, you get the full benefit. It's basically you telling the insurance company, hey, dude, I know I'm going to still be alive, even though I have that health condition. So I'm willing to pay premium for the first couple of years and not have a benefit because I know I'm not going anywhere. That's you telling the insurance company where to stick it. So if you think you can never get a policy because of your health condition or your age, there are guarantee issue life insurance policies out there that you can get, and you can get a policy too. Yippee, yippee, yippee. Okay? So that's underwriting. Keep underwriting in mind because some carriers will ask for questions only. Some carriers might make you go through a medical exam where they'll send out a nurse or doctor to your home. They'll take blood, urine, you'll get on a treadmill. Yes, they will bring little portable treadmills or a stationary bike. I have seen it all. They'll do an EKG, they'll do all this stuff. Whereas other companies will simply ask for medical records and they're happy. Lots of options out there. All right, one more break and we're going to sum it all up, tie it up with a knot and a bow. Insurance Hour with Karl Susman. One more segment. Stand by.
Are you feeling lost in the search for the right insurance? Making call after call, only to find no one willing to go that extra mile for you? At Susman Insurance Agency, we understand that frustration, and we're here to change your experience. Where others see obstacles, we see opportunities. While many might shy away from jumping through hoops, at Susman Insurance Agency, we're prepared to leap, looking under every rock, exploring every avenue. That's not just what we do, it's who we are. Our dedicated team doesn't just offer policies, we provide solutions. Solutions born from persistence, expertise, and a genuine commitment to finding you the best coverage possible. We don't just meet expectations, we surpass them. If you're tired of hearing no or it's not possible, It's time to turn to a team that believes in yes, and let's make it happen. Don't settle for less. Reach out to Susman Insurance Agency at 877-411-5200. Visit us online at sussmaninsurance.com or email sales@sussmaninsurance.com. Let's uncover the insurance solutions you deserve. Susman Insurance Agency, going the extra mile every time.
Hello. This is Insurance Hour. I am Karl Susman, your host. Thank you for being here and learning today. We have been talking about life insurance, yes, and we're not selling you anything. Novelty. Talk about life insurance and don't sell us life insurance? Unbelievable. Listen, we are not taking live calls today, but the phone lines are there for you to leave voicemails, so give us a call with your questions about life insurance or anything else. 559-656-0317. Call that number or text that number. You can also send an email to questions@insurancehour.com. So listen, we've talked about life insurance here. What should the takeaway be? Your main takeaway should be this. Life insurance is not simple. It's not well understood, and it's aggressively sold. Maybe I buried the lead here, right? Those are the three things I want to be sure that you take away. Now, it's also an incredible product to have. Incredible. You know what? When somebody dies, it's a horrible situation. Nobody is happy. Stop it. Don't be cynical. Nobody is happy. And then as a life insurance agent, you can walk in, if you are one, with money. You're one of the few people that show up to the wake or to the funeral or sometime shortly thereafter that people are actually happy to see. Let's face it. They've just suffered a loss. Yeah, money helps. It always does. That's just human nature. You can twist that however you want and tell me it's not true, and you will not convince me. So life insurance is an incredible benefit for people to have. But by the same token, if not purchased properly, if the right product is not purchased, if the right kind is not purchased, if it's not from the right company, if it's not with the right expectations, if it's not with the right understanding, there are so many things that are so important that are overlooked. And I see this when people will buy life insurance online through one of the automated systems, which do have a place. They can definitely be utilized when utilized properly. They can be utilized with an expert behind the scenes, for example. But things like beneficiaries, how is that? Should that just be my spouse? Who should own the policy? Should I own it? Well, I'm going to be dead. Should my estate own it? Should my spouse own it? Should my beneficiary own it? Should my trust own it? There are so many factors that can be at play that it's important to have someone that you can talk to and someone that can help you be guided through the process. It's a great product to have when it's purchased properly. It can be an absolute disaster if it's not. I've been an expert witness on some litigation in the past, and one of them I can remember specifically was a life insurance case where the beneficiary was an older person, and the life insurance policy had lapsed because of some banking issue where when the insured person died, the bank obviously had them change to a new bank account, not the person that died, the spouse. And somehow the funding didn't get changed, right? Or it did, and it didn't go through, something like that. And so premium wasn't paid, policy lapsed for a period of time, and of course, that's right when the person died. So whose fault is that? Well, debatable without a lot of detail. But the point is that the insurance company that you're with can have an impact on that, because some insurance companies work with that process differently for making payments. So if you're one of those people that changes banks a lot, that might not have funds in your account often or need overdraft protection, you might select a different life insurance policy that has either a longer grace period or has cash value to keep the policy afloat while you're catching up with premium payments. Again, there's so much here. There's so much to be involved with. It's not just a matter of, should I buy term insurance or whole life insurance? You can look at it that way and you're missing the boat. You can look at it like that and say, well, I'll just buy term and invest the rest. But you're missing a lot of other implications that are there. Find an expert, talk to them about it. But if you're asking me, hey, Karl, is life insurance a good thing? Abso-effing-lutely it is. It absolutely is. I don't know anyone that has ever purchased a life insurance policy whose family later said, well, that was dumb, or that was a waste of money. No. Do I hear people that will purchase a policy, keep it for 7, 8, 10 years, drop it, and then say, well, that was a waste of money? Well, okay, you're still alive. And perhaps they didn't purchase a policy that had any type of a cash accumulation. So sure, from that immediate perspective, it didn't have much value for them. They're still alive. Of course, they're not realizing that had they died during that period of time, then money would have been available, and then they wouldn't be thinking that, well, they wouldn't be thinking anything. Their beneficiaries certainly wouldn't be dissing the product, but that gets back to the original expectation. Well, what was their expectation? Why did they cancel it 7 years, 8 years, 10 years later? What was the reason? Did they not buy enough? And 10 years went by and they're like, what is that value? What is that death benefit going to do for my family? Nothing. Well, that tells me that they probably should have purchased a higher amount of life insurance or a product that has cash accumulating with it to be added to the death benefit. You see, there are always ways to tailor it. As complicated as life insurance products can be, the advantage to that is if done properly, you can customize it in really cool ways. But buyer beware. People are very aggressive with selling life insurance products. And anyone that tells you that it's wham, bam, thank you, ma'am, and it's just one size fits all, one trick pony, blah, 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 just beware. If you understand what you're getting yourself into and what you're getting and what you're not getting, cool. But don't just rely on the sales pitch, okay? These are important long-term products that impact people other than just you. I think that's one of the main points also to keep in mind. When you're purchasing a life insurance policy, you're not usually purchasing it with you in mind. You're purchasing it with someone else in mind. So be sure that you're keeping that in mind when you're making your selection so you know that you're getting something that's going to be good for the person who you're leaving it for to begin with. And speaking of leaving it, I can't believe I keep coming up with these. That is going to do it for today's show. I appreciate you spending your time with me. Please do let me know if you have any other questions. I'm here to help and here to answer your questions. This is Insurance Hour. I am Karl Susman, your host. Thank you so much for learning about life insurance today with me, and we will see you next week. Stay safe. I do want to thank all of you for taking the time to listen today. I know insurance is not necessarily the most sexy concept. It is important that you understand what it is you're looking for, what it is you think you're getting, and finally, what you actually did purchase. You simply need to know more than you used to. Things are more complicated. If you have any questions, please reach out to me directly at 559-656-0317. You may also send your questions to questions@insurancehour.com. Informing, educating, and entertaining, one policy at a time. This is Insurance Hour. The show is dedicated to Shamrock Papa.